We have a new item in our shop that you would love, that you'll possibly use every day. Open up your mornings with crypto and coffee and Black Lion Kings. We now have a new coffee mug, only $8 shipping. Go and support Black Lion Kings, your favorite Discord group, your favorite crypto Discord group. And we also have other items to show your support as well. Go and get it. The link is in the description below. Welcome back. This is a video meant to help people learn to trade, scalp trade and day trade. One thing you want to keep in mind, Black Lion, why we do this, why we teach, is we want to help people achieve financial literacy and financial freedom for their own. The American dream lives in it lived in the stock market. Now it lives in the crypto market. It's one of the hardest trades to learn, because you're ultimately responsible for yourself and your actions. There's no corporation. There's no business. There are no business owners. There's no, not even your wife or your husband can keep you from living out the mistakes that you make in this area. It's all up to you, and ultimately the people that want that responsibility on their back, they're here. They're in this market, and I'll just keep from being, saying what a man would typically say. But if you truly want to become financially free, you become a different person by learning from different people. There's a lot of men in this field. 9 out of 10 people that teach trading are men, right, in this industry. For a man that wants to fish on his own, they're here. Whether we wash out our accounts or continue to make the same mistake 300 times over the course of, a year, 10 years, 20 years, you're here fishing on your own. And this is the modern day of fish, the modern day equivalent to fishing. You take your own tools, you take your own lines, you take your own bait, and you go out into the big sea and you fish. And crypto has become the big sea, while it was just a multi-billion dollar industry just 4 years ago. Now it's a multi-trillion-dollar industry where big corporations are mining and trading. So you're up against algorithmic trading. You're up against the best traders, manual traders in the world. You're up against the best investors and financial institutions in the world. So the sea has gotten bigger, but there's still fish in there for everybody to get. The fish never dry up. This isn't a river. This isn't a lake. The fish never dry up. So whether you want to go long, you want to go short, there's always a way to make money in this market. You want to make money on high time frames, which we'll show you ultimately, or you want to day trade and scalp on the lower time frames, which is what we're going to show you here today. There's always fish to be caught, right? So with that preface, we are going to take a quicker look into how I do my scalping setups. Okay, so first thing I do is I look at the overall trade. You can come out here to the weekly and say, okay, we were in a downtrend. See if I can select all this or move this out the way. That might be old news anyways. We'll leave it. We're in a downtrend for the last, since the existence of this token. This is Baby Doge, for the past 3.5 years, right? And now we broke that downtrend. Okay, I marked this out. We're just looking for shapes at this point. Okay, you really don't have to mark out a range. The range shows itself. We marked out the bottom. We showed that there was higher lows being made. Okay, and we noticed that we had a downtrending. All the moves that we got up were lower and lower highs, right? And we finally broke a lower high down here. Actually, we can get rid of all that. No, we'll leave that for now. we finally broke out from this range. We got a higher low. So now we're back in an uptrend. All right. So now we know we're in an uptrend. We're in an uptrended market. We're in a bull market. We're at the end of the bull market. We're in a bull market. So with that zoom out, we zoom back in and we're like, all right, now I want to trade the 1 hour chart. Let me see what's going on the 1 hour. We do have to zoom out a little bit to see what the overall structure is looking like. If we mark out the range here, we can say this is the overall range, right? We say that's the overall range. And then we take the Fibonacci level and we say, okay, here's the overall range. Now we're going to mark it out with Fibonacci. And it looks like we hit maybe below, maybe this was a low, this is a meme coin. So we hit below the 786 level, but then we came back in it and now we've accumulated above it. And now to me, that's showing this accumulation here is showing great promise for what could come. Okay. We mark out the range. We mark out the range on, say, the 4 hour chart. Let's just say the 4 hour chart for the sake of the video. Okay. To get cleaner, you want to get cleaner candles. Okay. So we're accumulating down here above the 786. And from here, we know, okay, we've bounced up, accumulated above the 786 where we want to, with 786 and the golden pocket 618 to 65% Fibonacci zone are the area that we want, that we have wanted this whole time. We knew this was a downtrend. We realized this was a downtrend going here. We always look for, on low volume coins like this, meme coins especially, we want to be very mindful of the 786 to 618 level. Okay. And what I want to do is mark out that level. Okay, so we were always, even from here, we're always looking for a 618 to 786 move for a bounce, and that's what we want to look for. Even if we're trying to go off of and trade a lower time frame for a scalp, we want to zoom out and look at the last structure, and for this is the current structure we're in, and mark out to see if we've hit the 618 for a bounce and made a move back up, or if we still need to go down and hit the 786. We hit the 786, we were down there for a day or so, for half a day, and then we bounced up convincingly through it. Now we've accumulated above it. Now we can expect that is our bottom level. So now we're gonna undo this stuff. Now we can expect, now we zoom into the 1 hour, and now we can say this is the range that we've identified as the trading range we want to go into for the day, right? So from this range, you're probably only going to get 1 or 2 trades on a day, on the daily time frame. So again, we're going to take the range top, range low, and we're going to take Fibonacci levels, range top, range low. 0 starts at the very bottom, 1 goes to the very top of that range. Instead of going into settings and reversing, we'll just redo it. Okay, and you can tend to stay anywhere from here, bottom can be anywhere from here to here. Okay, so now we've identified, oh, we still have space left. We haven't hit the 618 yet. Okay, so we mark out the 618 to the 786, as we always do, whether we're going up or down. Okay, that's the range we want to hit. I always say at this level, if we don't, say we reject off the 50% level or somewhere before that, we start getting multiple red candles off of that, we're saying, wow, we rejected off the 618, or we rejected before the 618, so we could pull back. Say we hit this level at 3.9. We can say, oh, well, we zoom in. Now we're saying, well, we pulled back at 786 level, so I take a Fibonacci from the top of that level, right? Say we come here and then we start pulling back, right? Now we're saying, oh, okay, we mark this as the top for Fibonacci, and we come back down to the bottom level, go into settings, reverse, because we're going down, we're going 0 to 1, right? So we zoom in to here, right, we zoom into here because that's what we're looking at, 0 to 1. We're gonna delete this for now. And we mark the bottom out. Okay, so now we're like, all right, so we can go as low as, what are we doing? We're marking out the 618 to the 786. So what I look for is if we break down early, then I typically look for, all right, are we getting bullish divergences? Then we go to market cipher, RSI, MACD, whatever oscillators you use, and we see we're looking for bullish divergences or continuation divergences, right? We're looking for those divergences to happen. If we don't see bullish divergence here at 618, we can assume that we're going to continue down to 786 until we see a bullish divergence or a bullish reversal action. If we break down early before a 618 move up, then that means we typically go down to 786. We typically retest this area of support. And then worst case, if we were higher up in the chart, then we could start to say, oh, are we going to go down even lower? And we mark out this level and this level again. We go back to this level and say, okay, we didn't get the volume we needed to push the 618 up here. So now we are identifying this layer, this level, as a potential level to go to retest this area, the old support level on the higher time frames, right? So now we're looking at a level, go back to 0032, right? So that's what we're looking for when it's called a swing fail pattern, right? Let's bring all this back up and get rid of the green, but that's what we're looking for on a swing fail pattern. But if we hit the 618, then what we expect is we're gonna hit somewhere in the golden pocket. What we expect is to pull back another 618. Okay, so for lack of confusion, we want to bounce before the 618 level when we come back down. Okay, we identify we got some red candles after hitting 618. Now we're saying, all right, we hit 618. Now we're bringing up the support level right here. Bring up the support level. We're gonna flip this from 0 to 1. We're looking for a downward bounce area, going from 0 high to 1 low. Now what are we doing? We're identifying 618 to 786 area, and we want to see a bounce within this area. Ideally, we want to see a bounce well before the 618 level. Okay, so that's how we identify at least 2 day trading or scalping areas. Okay, so we bring back up this level. If we hit, and another rule that I operate by is if we hit 786, boom, usually happens on the dot. That's a bullish extension. 786 is considered an overextension level. We would want to then identify again a bounce area back to the 618. Okay, now we're again bringing up this level, the next level. Whether we hit 618 or 786 on the way up, we're now bringing up the support level. Okay, so that also means at the same time you're bringing up your stop loss level. Okay, so now you're probably break even or making a little bit of profit. You're guaranteeing yourself to not lose this trade by bringing up your stop loss along with the support level. Right, so now we flip this over. We'll then identify where the 618 and 786 level is. Again, if we hit 786, I tend to operate off the idea that we're gonna bounce off the 618 or before that, and it'll be a sharp bounce. And again, if you're looking for bullish divergences, and I'll show you in the chart or in market cipher here. For me, what we're seeing here is we're seeing instead of a pinch and a breakdown on this price action, instead of a pinch, like we're kind of getting a pinch there, we're looking for a pinch down. We're now looking for we got volume into where we are doing a continuation. This whole white part here on the momentum wave is showing that we're opening up to the upside, right? We got something very similar here. We look like we're going to pinch and then we continued up. And so what did that look like in the past, in the previous chart, we got a little small little pullback, and then we continued up for a breakout. Okay, so we're gonna expect the same type of action to happen here. We got a little retest, pullback, opportunity to either sell some of your position if you got in down here, sell some of your position here, pull up your stop loss to break even. If you got in here, your stop loss was probably somewhere down here at the previous level. That's where you want your stop losses to be at. Or if you had enough confidence in this position, your stop loss was somewhere down here, right, at a higher risk to reward, a lower risk to reward ratio. Okay, and what I do there is I would mark out this level with the long position tool. Say I got in, say the idea was to get in here on the first green bar. Okay, on the first closed green bar. Boom, I put that there and say, all right, I want a tight stop. I don't trust this ticker. I don't want to lose a lot. I'm gonna have a 1% loss. I then mark out where I would identify the 618 to be. Again, we go back here. Mark that out as the top from the previous past. And now I'm saying, flip that back 0 to 1 going up. 0 to 1 going up. And now I mark out where the 618 and 786 level is going to be for potential take profit areas. That's how I keep it very simple without going into any other resistance levels, how Bitcoin's doing comparative to the market, basically how it's moving the market up or down. Okay, so then I say, all right, my support level is, I entered at 0038 and I want my stop loss to be 0034, right? So now I have a 1%, you can see here I have a 1% loss ratio, but we're also, or loss percentage compared to a 4.5% possible gain. That's at the current level. Let's go pull it up to 618 and the ratio is going to go even higher. Okay, now you're looking at 13% gain compared to a 1% loss and almost a 13% risk to reward ratio. That's very good. Ideally on scalp trades and day trades, you want to look for a 2-to-1 ratio minimum. If you can't take a 2-to-1 minimum, a 2-to-1 ratio minimum to where you don't have a safe stop loss, like this isn't a safe stop loss, this is just for example. This is way too close to your entry. You get a closed green candle, or you even enter in at the start of a green candle where we get this pop up and then we pull back. Say you enter in on there, you're risking getting not liquidated, you're risking getting stopped out on your position. But excuse me, you're risking getting stopped out on your position by entering in by entering your stop loss at these wicks. Typically the algorithms, the bots of these exchanges, they run the stops a little bit lower, or they'll run the same stops multiple times, as you can see here on the hourly. And these stops were just what people typically do is, as I may have shown in other videos, they'll run these levels. The bots will run these levels for stops. These are the levels they're looking for, right? So either people run it here, say you get in on the close of the green and you get another green candle is identified there. A lot of people will set their stop loss here, like 036, right? The stops that get ran as this candle's identified, as this candle's showing, the stops will get ran, and the stops will even get ran down to here, down to this level. So you might have to have your stop down to this level right here, okay? So let's pull it back down to that level. It's going to take our ratio down a little bit, but now we know we're still going to be in the trade. We might lose 3.6% of our trade if we get a big wick down, if the market isn't moving in the direction we want it to go. But running to the 618, we're still looking at the 618 to our next take profit. We're still at a 3.6 risk to reward ratio, and we know we most likely won't get stopped out in this trade. Yeah, we can get wicked down to here or even here, but we won't be out of this trade. we might have to hold a little bit of red until we reverse, but we're still in this trade, and we have a favorable risk to reward ratio of 3.6 all the way up to a 13% gain. Now, if we pull this up to 786, the risk to reward ratio goes up to 4.7. Now you're gonna make 4.7 times what you put in compared to losing only 3% on your trade. Okay. So now that we have marked out where we want to take profit, we now set alerts for those profit levels. So now here we have 00405 at the 618, and we also want to mark out the 786 as well. You might want to come in here, hover over the arrow. This is on TradingView. Hover over the arrow, you get this little dialog box showing the alert that you just created. Right click, click edit, and you're going to want to front run that level. So I identified the 786 level as 4189. You probably want to put 415 just to guarantee if we go to that level that you take profit. Most of the time when we hit 786 levels, we get a candle wick, and you're like, if you're the type of person that waits for that level to get hit and then you set up the sell order, you're gonna miss it. But you have to set your sell order in advance. Okay, so now that we've set this alert, you can mark it, you can name the alert if you want. Baby Doge, what are we on? 1 hour, TP. We're doing now that we've set the alert. Now we're looking for, we set the 786, now we're looking for the alert. We edit it and we set it to front run it, right? And we labeled it, go in here, click edit, we labeled it, Baby Doge 1 hour, TP2, 786 fib, and save, right? 786 is over extension level. It shows positivity for a future of possibly going to the 1%, the 100% level, and possibly even continuing higher. So what we're going to do from here is go into ZOOMEX. ZOOMEX invite link is in the description below, or it's in the group. Ask me for whichever one you want to use. We're going to go into ZOOMEX, and we will show you how to manage these trades. For ZOOMEX I use Singapore for VPN. You must have a VPN to use ZOOMEX or Blowfin. And because Netherlands and Spain are now restricted IP addresses. So these are the trades I took. I got out of the trades last night just to play it safe. I don't like taking these scalps and day trades with me to bed. Okay, so we're going to show you how to set up the trade. We're going to show you how to set up the trade, and we're going to show you how to set up the take profit levels and stop loss. So first thing you're going to do, we're already in Baby Doge. Make sure it's Baby Doge instead of Verge. Okay. You're gonna go into market. You're gonna set your cross limit. There's a difference between cross, limit, and isolated. Cross uses all the liquidity in your wallet, even if you have multiple trades going on. Isolated only uses a certain amount of money that you put into that specific trade. Okay, so it keeps you from getting your whole account from getting liquidated. I always set it, as I say in my videos, I always say it to the highest. So I use less money up front, right? So I'm using more of the exchange's liquidity to make my trade. Okay, so we set that, and let's say we're going into 1,000. I set the denomination into USDT just to make it easier to keep track of how much I'm putting in, especially with Baby Doge. It's a million Baby Doge, so they can get rid of a bunch of zeros, right? Which is why I keep saying 0037 while on the actual trading view chart it shows 00000 in the number, right? So it just makes it easier to keep track of all this. So I use USDT, say we're doing $1,000 order. Now that shows at 25x, we're using $41 of our own money. So then you do 41, use 1,000 divided by 41 gets your liquidation, or excuse me, your leverage multiplier. Okay, so we use 1,000, we click buy long, and it'll show you order price. We always use last traded or market, it doesn't matter, we just stick with last traded price. It shows you the number of baby Doge that you are purchasing in this order. You're only using $41 order cost, $1,000 value because it's 25x leverage. If you use 10x, it's 10 times $41, right? And estimated liquidation price 0.325. So this is important to understand. The current price is at 0.037, and if you're playing with leverage, this liquidation price, this is why they bolded it in green, is because it's the most important thing you can possibly keep track of in a trade is your liquidation price. If you're just jumping into a trade because you're undisciplined, which I do sometimes on my smaller accounts, which this is one of my smaller accounts, then there are times I'll jump in and then I'll figure out where we're at. If I see that price action is going up on Bitcoin, Bitcoin's coming up from a local bottom, then I'm gonna jump into these type of these meme coins, and I'll figure it out afterwards. I'll figure out how long I have to hold my hold my red, stay in red before we get another bounce, or I'll wait for an actual pullback on the market. But going back to the most important thing is your liquidation price, because I'm using cross. If the price pulls back to this level and you take this trade, then your whole account's getting liquidated. Okay, so if you're using cross leverage, you'll get a verification here. Time and force, immediate or cancel, that's what we always use. I wouldn't press this box here, do not show confirmation window anymore. You want to be able to review this stuff before you jump into a trade, right? But what we're going to do, this is the most important part of the video, since we set it to $1,000, you're going to want to pull back on the amount you put into the trade, so you can get your stop loss, ideally best case scenario, to 0 or under the local low. You want to make sure the stop loss is under the local low at 0. As you can see, there's 0.029.091. So we're going to say 0.029. So let's just say that number. Let's try $800. Let's see what it's at. Okay, we hit buy long and we're still over that cost, so we're gonna have to pull back a little bit more. 700. Buy long, nope, still there. So we're gonna have to go probably like, let's try 550. $22 order cost. Nope. 500. It's probably gonna be even lower. We're close, so probably we'll say 425, right? Order cost, we're only using $17 for this trade. Okay, so we're at or under the local low. So now we're saying, all right, well, there would have to be an event with Bitcoin or in the major market that takes us down to this local low very quickly, where we lose a lot of value in baby Doge for this to happen, for my account to get liquidated. But before that, another very important thing to keep in mind is you want to set your stop loss before you get in. And what do we set the stop loss at? We're going to change, actually, yeah, we're going to change screens. I'm going to put, yeah, we'll just flip it that way so I don't forget, like I did last video, to change the screen. We set our stop loss to 345. Okay, we're gonna set our stop loss to 345 just for this video's sake. 0.00345 is our stop loss. So now right now we'll set a take profit as well. We'll set this first take profit. So now we are basically betting at this position that we can possibly lose $33 on this trade instead. In this account, there's about $300. In this account, it's about 10% of my account. You don't want to risk any more than 5% of your account if you're very sure of where you believe you're going in this trade. Okay, 5%, 1 to 5%, no more than 1. You're making a bunch of different trades on a bunch of different accounts, no more than 1%. Okay, 10% is a lot for this trade, but we're doing this just for the sake of this video. Okay, so now we're going to go back and find the first take profit area on Baby Doge, and we're saying we're identifying the 618 level. No, so first we're going to take a step back. We're going to go right back to support. We're going to pull this back because that was for a different example. We're going to reset the 618 and 786 target zone. What I tend to do is mark out local scalp target zone. Okay, just so we have everything marked out. First level we're going to look at is 397, 398-ish. Let's say 397 for first local take profit as I set in this alert. So we're going to go back to Blowfin. Now we're going to set our first take profit. And hopefully they didn't screw me over again. Yeah, see, what happens with this exchange is they reset they reset your preferences very often. So what we're supposed to have here is the option to set a temporary a partial take profit, but for now we'll just use this as an example. It's only an example anyways. We'll have to fix that later. It's very frustrating for ZOOMEX, but here we are. 0.0039, we're going to front run 397. So now you're looking for the first take profit, and again, this is going to be a partial take profit. You're looking for 26% take profit at that level. Now we're going to look at the next take profit level, which we're going to just say 786, 00414. Okay, so we can identify that. So, but if you want to set that take profit, you hit confirm and it'll show up. It'll show you where it shows up at. So we're going to show what the second take profit is, the TP2 414. Let's front run it 412. We're looking at a $44 gain on this trade, using $17 and $425 in potential, or excuse me, in order value. Okay, so once you figure that out, you have your, actually we're going to need to set those anyways for this trade. 0.00345. Since I can't set a partial profit anymore, which is sarcastically wonderful that they do that. And we're going to set the first take profit at 0.039, 394. Use enter. Okay, so we can do partial, thank goodness. So we're going to set 25% first take profit, and if this trade goes south, we end up hitting this level. Do I want to hit 100%? We'll just set 25% as the take profit because I want 50% because I would still want to stay in that trade. Okay, so we set those levels as take profit. Now we can go back in here. You can click on details and it shows areas you can take profit. You go to the action area and you can edit those trades yourself. Okay, but now we're going to click the add button here or the add button on the last page, and we're going to add the next take profit levels. 412. We're going to set another 25%. You don't need to set a stop loss for that. That can get complex. But we're going to just set that as the next take profit. And if we go back to Baby Doge, we're going to set the 1.0 as a take profit level, as well as 0.0436. So we're going to front run that one. We're going to click add 0.0043. Let's say 3. And we're going to set that one at 50%. So we hit that level, we're going to want to pull back and take some profit from there and reset the entire trade, because that'll be the end of our local scalp trade if we hit that 1.0 level. Okay, or hitting the 786 level, that's an area where we're like, all right, we're looking for a pullback, and most likely that on the 1 hour time frame, that trade's probably going to be done, and going into the end of the day, you're probably not going to want to take another trade. We could have all this happen, up, down, into another pattern. By the time you wake up, if you're just If you're just scalp trading, you're gonna have to run this whole analysis again. You're gonna have to pull up the Fibonacci's to that level, right? You're gonna have to move up the support level to this level, and the target levels are gonna look different. You're gonna have to mark out those 3 target levels again. So now that we marked out those levels for take profit levels and stop loss, the next thing we're going to want to do is show market cipher or your oscillators. So the most important thing you're going to look for here is to check the trend, and what it's looking like on the 1 hour is that we're getting a red dot here, while we're getting money flow pulling back, the yellow VWAP levels pulling back as well. So we want to respect that level. So what we're going to do is go back and see if the lower time frames are showing that type of action as well, and we are. So this is another way you can say, all right, I don't like I don't like how this trade is playing out. We're getting higher lows on the oscillator while we look at the price action. While we got we're getting higher lows on the price action. So what that's telling me is a continuation down. So if we're trying to if we're trying to scalp this level again, we're gonna have to wait for either the 12-minute, and these are the time frames I have set up. You can pause and set up your time frames for yourself. You click the little down arrow, and then you go to the very bottom of there's too many here. Okay, add custom interval, and you can add them yourself, and then you click the star next to them to add them to the top. Okay, those are the time intervals I have. Again, pause and make your own. These are the time levels I have, basically double of each one, all the way up to 1 hour. But we're gonna wait for the 12-minute to figure itself out. You can look at this. You can also then go down even lower to verify that we might be bouncing. If we get a bounce from we get a green dot from any of these levels, but ultimately what we're seeing here is 6 minute already broke down. We have money flow going down. We have the white part of the momentum wave going down as well, and it's pretty wide open here. We haven't started to see a pinch up yet. As you can see, the pinch is happening there. We were in a little uptrend on the 6 minute, and now we're breaking into a downtrend. We're downtrending here. We're expecting a move up, or we're expecting a move down. Or you go to the lower time frames to be able to tell what the trend tends to be for the higher time frames. And since we're working on the 1 hour, and the 4 hours are our big boss, 4 hours still trending up on the money flow, but the 4 hour is showing that we can continue up. It could start to pinch over. This will have to be another video, but we're looking at the clock right now. 12 o'clock Pacific Standard Time is showing us that we just had a big 4 hour candle finish 10 minutes ago, and we see the VWAP coming down, or we see money flow coming down. So what I see happening is from the 4 hour, we had an accumulation level here. Without even looking at the charts, we accumulated the money flow showed an accumulation happening, and then we had a small little break up, but then we came right back down. Then we got what's called a trigger wave right there, which is just a higher low. We got a trigger wave green dot there, and then we got a higher low green dot to the top. So what that's telling me is there is an idea of continuation happening on the 4 hour time frame, and possibly on the higher time frame. So what we're looking for is for the low time frames to figure themselves out. So we're looking for, since we're only scalping here, we're looking for the 12-minute. We got another trigger wave here, which that trigger wave, as you see here, showed that we end up getting a break up from these sideways levels. We got a breakout, and now we're cooling down, pulling back, possibly to a resistance level, especially after Bitcoin, the big boss, made a $6,000, $7,000 move up over the last 8 hours or so. And so the market followed with it. So the market's cooling down a little bit. Low time frames are telling me we're going sideways, waiting for a resolution of these oscillators. So what I see happening is We end up pulling back. We end up pulling back, either making a higher low from this level, or we end up just going all the way. We end up going all the way down to this 60 level, or even a lower high, and then that shows us the trend. So based on what is going to happen with this next 12-minute, we're going to show what range we're going to end up going in. We're going to end up going lower back to support and getting stopped out possibly, or we'll just have a pullback and a continuation of the trend. And so right now what I'm seeing, we're going into a holiday season. I think we can possibly see a little bit higher if Bitcoin continues to go higher. We're on the 12-minute, and so what we're going to do is create an alert. You're going to want to make sure you have the Fu Manchu indicator on. Fu Manchu cipher B plus divergences, very important. Then after you find that indicator, go into condition and price, set VMC cipher B. You can do only once or only once per bar. If you want to continue to alerts, it's once per bar. If you want only once for the specific day trade, then you're going to want to do just only once. We're going to keep it on only once, open-ended alert. We're going to set baby Doge, 12-minute. This is all for your own information. 12-minute, we're looking for a green dot as part of a reversal, or you can come up, so you're going to come up here. You're either going to use in the buy section big green circle or small green dot. I haven't seen a real difference in how the alert acts. So I just put green dot, and I'll put like buy dip or something. We'll put buy dip or something like that, right? Only once, and then we'll click save. Okay, so now we'll sit back and wait for this 12-minute alert to happen ultimately. So this is how you can avoid watching your screen all day. That can take a toll on people. If you watch your screen all day, psychologically it's going to wear you down, and then you end up making bad decisions that you typically wouldn't make when you're awake, and that just goes with anything we have to deal with as adults in life. Okay? So now we're going to just wait for the pullback to happen. We're going to sit in this red on this specific trade. We're going to sit in this red, and we're going to stick with our trade. That's just how we're going to do it. From here, what I like to do, get rid of the market cipher B. How I'm confident in these levels. I'm confident in this trade. We can zoom out to 4 hour, probably zoom out a little further. Reset chart. I tend to find fractals first. If I find a fractal and I see that it's happening, then I tend to ride it out. And what I'm expecting here is for us to do a full, the fractal that I found is pretty closely resembles what's happening here. And that's how the world, you always hear me say, it's how the world operates, how the universe operates in fractals. We as people are fractals of the higher plane of existence. And everything works in fractals. Look up fractals. Just type in fractals in YouTube and go crazy on learning that knowledge. So trading is no different. Humans operate on the fear and greed spectrum. Everything's all fear and greed. Right now we're in high greed, where we want higher prices on everything. And two, our charts tend to be the same because of those fear and greed patterns. Okay, so we have the same pattern going on here, as you can see. Very same pattern here. We got the dip here, we got the pull up here, we got the pull back to this level here, right? Got the pull back to this level. Now we're bouncing up from this level, and the expectation is to go back to the 1.0 level. You take Fibonacci, we make this a support, we make this level as the high, right? And the expectation is that we already visited this 618 level. Visited the 618 level, pulled back, and this is the area we're operating in on basically this big candle. This is an 8 hour chart. We're expecting at least another 618 to 786, but we went to well past this 1.0 level, this 100% level. So we can expect anyway. I'm honestly expecting, playing it safe. I'm expecting the 786 touch on the current chart. So we're running that fractal overall. There's the bottom. There's the top. Move this over. Okay, I'm really expecting, this is a very overextended level. This is the level I'm expecting. Anywhere from 5246, ideally to 587, all the way up to local all-time high. Okay. And so then here for the overall chart, we're on the 4-hour, 8-hour chart. This is more of a macro move that we're expecting to happen. Ultimately, I want to stay in this zone. I want to keep my trade in this zone down here. This is all baby micro levels that I'm expecting to blow out through here. Okay, so we mark out, we make an alert for the 618, make an alert for the 786, and we make an alert for a new local high, or equal high at least. Okay, you can go back into your trade and set those up here if you want. We're just talking about scalp trading, but from this level, last thing to mention, from this level, you're going to want to set you're going to want to keep at least 25% of this trade. Whether we pull all the way back to support, you moved up to your support to 3.3, whatever it is here, 3.334. The idea is we don't go any lower than this 3.58 level here, or we don't go lower than, after we blow out, we don't come back, like lowest we come back to is this 3.7838 level. And so you keep 25%. If we come back to this level, now you add back in heavy. If we keep a higher low on this price action, ideally if we keep a higher low on this price action here, right? We stay somewhere above this level, we pull up, we come back, 786, you're going to want to keep 25%. Okay, so ultimately, one more thing we're going to mark out. I'm going to show you how to mark out the next fractal. So if we're saying we're right here, somewhere right here, and we want to go up to there, zoom in for this. Let's use the next level as the fractal where we could go. This shows that Baby Doge has very high potential. We would be looking at, ultimately, I would say we're like right there on that trend line. We go up another 31% if these levels are played out exactly as it has in the past here. So now we go to the fractal tool, or the bars pattern. You can find it. I always forget what it is. You can find it here under projection, the bars pattern. I marked it out with a star. That's how I was able to get this bar down there. Now we take this there from that candle to this candle, and now we can implant it. We can implant it over here. Again, this is a much bigger area happening here, so it's going to take longer to play out than this. It's going to take longer to play out. Let's say it does something similar to that. Okay. Here's how I identify how long this pattern will take. We're going to measure out from the beginning of here. And let's say just to the end of this pattern. Actually, we're going to measure out where we started on the breakout flagpole to where we currently are in regards to where we were in the past. We're looking at 9 days, 8 hours. So now we mark out here to where we're currently at, and it's taken 17 days. So we can roughly say for this entire new pattern to play out just like this. Sorry. For this entire pattern to play out just like this. For it to play out just like this. So where you start to get a major downtrend again. Actually, let's just go back. Let's take it a step back. Let's take it a step back. We're going to zoom in. We're going to say just to this level. Right? Just to that level, we're saying it takes double the time. From there to that high, 13 days. So it could take 26 days, how I estimate how long this pattern is going to take. So now we can mark out 26 days from the start of this blowout, this flagpole. So now we can estimate where we're going to go and how long it's going to take. 26 days, give or take one day. In my opinion, we're looking at January 2nd to where we could see this pattern possibly playing out. Okay, there's a lot more I can show you how I take my trades. You can watch my other videos for what I do with after what I do with these fractals. Plenty of videos. All my videos show how I mark out overextensions for areas we haven't been to. We use Fibonacci's and we use the price range tool as well. But we're going to leave it at that for now. But this is very important information for Baby Doge. If we're showing that we're going to hit this new quote-unquote high for Baby Doge, it looks like it's going to take from where we're at. We said January 2nd. Let's go to the 1 day. So January 2nd from here, how many days is that? We're talking 9 days from now. So ideally you're going to want to hold this range. And it looks like this fractal is playing out very nicely. It could go higher, it could go lower. We could, instead of it being like a higher high range with the flat bottom range like we had here, right? We end up having something looking like that. It could be the current range can end up going like this. It could end up being a falling, like a bull flag type of deal throughout here, right? But just be aware, 618 levels, 786 levels, those are your most important friends to have when you're measuring out where you think we're going to go and for your targets as well. So we're going to wrap it up there. We're going to continue to teach you as we go. We're going to try to get down to the nitty gritty on some very key details of how I mark out my target zones, how I mark out my support levels, resistance, and then we're even going to make a comprehensive video on how to utilize the market cipher indicator tool as well. So we're going to keep it at that. If you have any questions, please fire away. Please keep it within the chat. If you're in premium chat, send your questions open chat. No question is too dumb. This is how we all learn together. We're going to break this up into multiple videos on its own for each topic that I discuss, for each little indicator that we use. But this is the comprehensive video. For now, each token that we look into, each stock that we look into, and we utilize this scalping strategy, we're going to refine it as we go. It's going to get better and better. So, but ask your questions, comments, whatever you want to say. If you see something in the charts that I didn't see, please let me know. You use an indicator that I could use to make my trading better, please, show me, let me know. Let's keep this discussion going. Again, this is Baby Doge. But yeah, thanks for your time. Talk to you later.